I buy something for 5 rupees, sell something for 10 rupees. Now it is available in the market for 4 rupees. And my selling price from 10 it is 80. Till the time I can sell the things more than my manufacturing cost, I will not write it down. See the example. Next slide.
Company may not be able to sell about 12 also.
If you cannot sell over your manufacturing cost, you bring it down, otherwise no. You are buying something, suppose buying or manufacturing, your cost is 5 rupees, you are selling for 10 rupees. Now it is 3 rupees, you are selling for 8 rupees, no problem. Till the time sell price is above your manufacturing cost, then that means you cannot be anti-conservative. Because one thing you remember, if you reduce your inventory lower than cost, that means you are reducing your profit. And automatically the amount by which this year profit is reduced, it will be increased by the same amount in the subsequent year. Because this year's closing stock automatically become opening stock for the next year. Okay? Next one. Language is a bit tough. Not that simple, sir. Huh? They get this, na? This. They get this. They can avail of this, na? This PPTs and all.
Yes. All the PPTs has been uploaded in our website eirc-ici.org. All the PPTs has already been uploaded in our website eirc-ici.org. Just go to the background resource part. There you will find the background material. You will not only find this PPT, you will find the text of the Indias. You will again find the handouts that has been uploaded. You will also find the background material of any seminar. We had come out with a referencer also. 9-10 referencer, 11 referencer we had come out after the February. So those referencer has also been uploaded in the separate section in the website.
Under resources.
No, that is there in the separate section. You referencer you will search out.
I don't think very comfortable language, yes or no? Huh?
Okay.
Okay, clear sir? Huh? तब तो मेरा नौकरी गया. Huh? A very close friend of mine who is a very renowned doctor, I mean cardiologist, I mean international figure. So all of a sudden I saw him in a TV challenge, he is recommending to keep very good heart what you are supposed to do. Okay. Next morning was a Sunday. All of you follow Bengali? Any of you cannot follow? Ah. So next morning I telephoned him. সবাই যদি হার্ট ভালো থাকে তুমি কি গড়িয়াহাটে কমলা লেবু বিক্রি করবে? হ্যাঁ? Your 3 cars cost you more than 10 crores. उसका क्या नाम है हमको नहीं पता सर. I ride on this car, I don't know the names. 1 2.5 crore, 3 crore, 4 crore, 3. For husband wife there are 20 servants in the house. हमरा तुम क्या जाके संतारा बेचेगा? सबका हार्ट ठीक रहेगा. बहुत कल ज्ञान दिया था हमारा पर्सन लाइक दिस. Just see the example please for this. If you have understood, tell me the answer. That's the acid test. Tell me the answer, please. So got the answer?
Yeah.
Huh? No. Sir?
Yes.
What the answer?
What was the question? It is a statement of facts.
Do you expect me to write something required? Describe what do you understand by 16 marks.
The businessman should incur additional 1 rupee 50 paisa cost and should sell it at 4 rupees.
Replace the stock by 1 rupee 50 paise. Yes or no?
No, incur additional expenses of 1 rupee 50 paisa per unit.
And replace the stock. He has to give the stock also.
Yeah, of
Yes,
course.
yes.
Yes. Right. Very good.
He will gain by 25 paisa. He will gain by 25 paisa. No, I'm not saying replace the cost. I'm saying incur additional expenses of 1 rupee 50 paisa and then sell that stock at 4 rupees. That way he will gain 25 paisa per unit.
Yes. Clear? Okay, example 3 you will see at home, nothing is new. Reversal of thing. Do I need to explain?
Yes,
please.
Tell me how can I make out? Sir, please, you.
very clear.
Huh?
If I have to replace the inventory, then I am incurring a loss of 1 rupee 75 paisa. And if I improve the same inventory by incurring additional cost, my additional cost is only 1 rupee 50 paisa. So therefore, by going for the second option, I am saving 25 paisa per unit. So I shall go for it.
There are two options in my hand. See, sell the stock at 2 rupees 20 paise per unit and reacquire the stock at 4 per unit. So what will additional cost?
1.75.
1 point and replace the stock. I give him the stock plus pay him 1.50. So which one is cheaper? First one is will cost me 1 rupee 75 paise. Second option will cost me 1 rupee 50 paise. Thing is with you. See it again. Okay.
Last slide.
I have two options in my hand. I bought one stock for 40 rupees. What I see? That one equivalent product is available in the market for 4 rupees. So I have two options in hand. What is the option? That I can do one of the two things. What are those two? That I can sell it for 2 rupees 25 paise. 2 rupees 25 paise. And second thing is what? I can replace the stock. I give him the stock and get the new one just by paying 1 rupee 50 paise. Which one is cheaper?
Second one.
Second one is cheaper. First one, what happens? I pay 2 rupees 25 for getting what? Thing of 4. Second one, I pay how much? 1.50. So which one? There is 25 paise difference.
I'm talking about the last valuation you given, the last line.
Valuation is how much? 2 rupee 50 paise. Valuation is market 4. How much I paid for this?
But you already paid 5 rupees now, earlier.
That I lose.
It should be 4 minus 6.5.
No. How can it be? Valuation is today 4. Out of that I have paid how much?
But already paid 5 rupees earlier.
So that is a reduction in the value of the stock. Think a while, we'll discuss again tomorrow. Okay? I can get something of value, sir. I can get something of value 4 rupees only when I spend 1 rupee 50 paise. So the value of the inventory is 2 rupees 50 paise. I can write at 4 rupees only when I pay from my pocket 1.5. So the value is 2.5. I'll pay 150 will come, inventory value will become 2.5 to 4 rupees. Acha. Para 34. It's given in bold, para 34. What do they say? Simple thing is, I bought something for 5 rupees, net realizable value 4. So I am writing it down. Okay, that thing is still in my stock. Prices have gone up, so I also increase this. This will not be shown as an income, but it will be shown as a reduction of the inventory cost for subsequent year. Just to see example 3.
Shown in the statement of profit and loss.
As a reduction from inventory cost. I am showing you the disclosures. I am showing you. Clear? Just see paragraph 33 for more clarification, because disclosure needs to tell me what are the situations that came. Nowadays nobody believes. In my life once I remember tax reduced. In my life only once. 3 साल पहले हुआ था. 2 रुपये नकद में कम हुआ था. Otherwise, just to see this paragraph 33. Explain very beautiful in lucid language. Last sentence is very important. Your disclosure needs this. If you have, there is reversal of previous write downs. This is very, very important for the disclosure. Can I go ahead, sir, madam? No.
Yes, sir.
Some participant, they look very serious. Don't take things, I am not at all serious. You should have fun in learning, na? Huh?
We are serious because of this one functional
No, no, no.
500,000.
Apply some, you know everything, just the things are different, just keep one thing in your mind, you need to make some faithful representation. That's all. There is transparency. You do it or not, that is different. Theoretically, what else I am telling you. Is this clear?
Yeah.
Raj. Now, 35 paragraph. make it enlarge it. Paragraph 35.
So it will be capitalized and then depreciation will be charged on the total amount of the asset. So that amount gets depreciated.
Last class I was discussing that change in inventories, not the same figure will appear in the cash flow. Do you remember? When we are discussing cash flows, it is not blindly copy of the difference in opening and closing my inventories. Because here one entry, simple one entry I have passed, that is what? Capital work in progress debit to inventory, yes or no? Huh? So inventory value is reduced, but I paid for it. An asset increased, so how do I account for? So I need to add back. While calculating, I need to reduction from asset, again increase in inventory. Inventory value is reduced because that is used for my capital work in progress. Remember this. Same problem that I have given you yesterday. I don't know any of you having or not. You just make an increase of 5 rupees in the closing asset value and decrease of 5 rupees in the closing inventory value, and you make the reconciliation. So this is the effect mainly on our cash flow. Imagine. Simple thing, inventory debited in PL, not it will be debited capital work in progress, then that will become my fixed assets in future. What sub said, it will be in. But for the time being, my cash flow will be differently treated. I am to add back and subtract. Inventory value will be increased by what I am debited to this, and that asset value will have to be decreased so that otherwise my cash flow will not match. Opening cash and cash equivalents plus cash and cash during the period will not be equal to my closing cash and cash equivalents.
That will offset.
Yes. Because it is a non-cash transaction. So what they say, they are not specifically true. It is not possible everywhere to mention in language that these are eliminated. So something brought back is also elimination. I have done something, I bring those things back. That is also elimination. Yes or no?
Yeah.
I am eliminating 5 rupees. I have already deducted 5. I bring it back. That is also elimination. So error can be both. Error of omission, error of commission. I ask somebody, give me 100 rupees note, get one box of bottle of Horlicks. Possibility he can make 2 mistakes. Totally forgotten. Error of omission. Brings what? Horlicks money, 2 packets. Error of commission. So remember this. Something in anywhere you see, this is eliminated from cash flow. That means if you have not done something, remove this. Convertible debentures. Debentures reduced, this thing increased. Equity share and securities premium. Non-cash item. This is also non-cash item. No outside connection, does not affect my accounting profit or taxable profit. Okay. Acha. Disclosure 36. One by one you see this disclosure. Most of you are, I suppose, auditors, or you had audit in your life. First thing, any business you talk about, the first thing that you have to see, what is the policy of the company. And most important thing actually, my father used to tell me that a country's economy is based on politics. Yes or no?
Yeah.
Overnight, Endon was capped by Bal Thackeray. Yes or no? Beef slaughtering was banned in Bombay. Imagine, so many people earning. It's good or bad, different things. So any business I talk about, first thing, what is its accounting policy? It has some policy, what business it deals in, what it buys and reselling, what is the structure, what is the overhead absorption, what are the assets involved, capital incentive, labor incentive, they have changed, what is the policy. So what is my policy about this? Second one, the total carrying amount of inventory, the carrying amount of classification appropriate to the entity. How do I classify? Same group at one place. Next, see this. It is taken for granted that they are valued at cost lower LCM rule, but sometimes it is at fairly valued. Sugar mills, 70% probably quota, 30% is free sales. Also not, they also decide how do you sell. Each and everything have a policy. You buy sugars has to be in cash, I suppose.
Yes.
Huh? 100% cash. So what is the stock valued not at LCM rule, valued at fair value? The first example that I am giving. That will include also my onerous contract. I have already bought. All of a sudden, there is an increase, the bill came 80 rupees, tomorrow I will supply. I cannot say no because I lose the amount that I have deposited. Next one.
But why they are not used net realizable value instead of fair value?
They have used both.
Here, this
Huh?
disclosure.
Net realizable value, that is specifically mentioned in the standard itself. (28) para begins with what? Para 28 begins with what? That's the basic rule. They talk about so many things, how to work out net realizable value. Inventories are valued at net realizable value, but there are certain cases where you have to value at fair value you have to use. Next. Go back to that, 36. D. The amount of inventory is recognized as an expense, then amount of the write-downs, and second F is what? Reversal of any write-down. And lastly G, circumstances. Can you just 33 paragraph? 33 paragraph. See this. Circumstances. Selling prices have to go up, otherwise there is no possible. Reversal of previous write-downs. Simple thing. Next one. Anything pledged as security for liabilities. Regarding paragraph 36, in this one, 98, paragraph 98. In this one. Paragraph 98. You see, what is the same thing here also, A. I-7 cash and cash equivalent will tell you that bank overdraft is subsumed in cash and cash equivalents. Index 1 will tell you it's one of your current liability. That's why you make all these adjustments. Just this example 4, you see that's the disclosure in Indes compliant balance sheet, how it will appear. Example 4, 27673, that is the current, shown under current asset in balance sheet. They are classified according to raw materials, WIP and finished goods. And these are the value. Now see the notes. See disclosures, what is there in 36, just have shown you. The cost of inventory recognized and expense during the year. Example 4.
Can you explain this point number 1?
10?
That point number 1, disclosure point number 1.
Cost of inventory recognized and expense during the year. This is this much. In the PL, how much has been recognized as an expense in regard to inventories? That is 87.
Write down.
Yeah, which one?
Is this point is write down that it's
How much you see the cost of it recognized as an expense, how much you have shown as materials consumed. Okay? Second one, you see that requirement and how they write. The cost of inventory recognized as expense includes 2340 in respect of write downs of inventory. This will have to show this much is consumed, this much is writing down.
that means 2340
Huh.
is included in 87.
Yes. Write down 2340 and has been reduced by 5 reversal of such write downs. Previous write downs have been reversed as a result of increased sale prices in certain markets. Again I am showing you para 33. Para 33.
That is actual write down is 28540 minus 500.
Yes. 33 paragraph. You see this last. Same thing. As a result, why this reversal of previous write down? As a result of sale price in certain markets. 36 says you have to do this. Reason for doing, discuss in 33. Remember this each and every paragraph that you have to mention in your reports.
And you have to give the explanation also.
Explanation you don't need, you have to copy the standard itself. Regarding IFRS, what I have understood, that is either you have the knowledge or you have whereabouts of knowledge. What does it mean? I know the meaning of the word cat. Fine. I don't know the meaning of the word dog. So I have the dictionary in front of me. So if you do not clarify any queries when you sit down, come across any problem, you should be able to find out from the standard itself. And that you need to carry with you. Last. Inventories of 1 to 9 are expected to be recovered after more than 12 months. Where it is written? What does it mean? We are taught current non-current distinction. What do they say? What does it convey? Yes, please. Fine, non-current, they put it in non-current, no problem. But why do I write this? Inventories of 1 to 9 is expected to be recovered after more than 12 months. I am showing you the total figure of 27673. That is, I told you what? This figure appearing under the heading current assets in the balance sheet. Out of this, 1290 are expected to be recovered after more than 12 months. What does it mean? Anywhere it is given in the disclosures, I have shown you the disclosures. 36 again. Hmm? 36 again. Anywhere it is asked. Anywhere. C, no. D, E, F. Anywhere it is written? No. Then Paragraph 65 of Ind AS 1. of Ind AS 1. Information, third line. Third line, information. Information.
Information on the expected date of.
Information on the expected recovery. See this, for example, the last line. This is the disclosure you need to make. Okay, not mentioned there only. Standards are all interrelated, they are articulated. इधर में नहीं बोला इधर में. So see the language again. Now the question is, there is hardly any Ind AS compliant financial statements, hardly get to one or two. I have not come across any financial statement where I have seen inventory at both places, current and non-current. Is it because of this, the language? It is for my operations, there has to be. Out of that, if I expect no, that is not likely to be recovered within 12 months, I make a special mention that is given there. Last, number 4. Mode of valuation that we'll have to mention.
But how does one evaluate that how much of stock will be carrying for more than 1 year? What is the estimation?
You make an estimate, it is not likely to be recoverable within 12 months. If it is recovered, fine, you are in a good position. But if you have some doubt in your mind that this is not possible to cover within a year, that's your own judgment. This is a harassment rule. If you can sell it, fine, no problem. I am asking you, sir, give me 10 rupees. You say, see me in the evening, and in the evening, if you give me 20 rupees, I am happy or unhappy. Simple thing. This is faithful representation. I am conservative. I anticipate. I have some apprehension in my mind that something will not be recovered in this. Last is the valuation of inventories. What is the mode of valuation? This is all about this. Now, I do not know, again he is telling me that some income tax things. So income taxes, I told you that it is applicable in all the standards barring the standard itself. Okay, yes please.
Regarding if the operating cycle is 4 to 5 years, then what will be the disclosure? If the operating cycle for a real estate industry is 4 to 5
4 to 5 is non-current customary. Yes.
non-current.
Yeah. 4 to 5 it is not normal operating cycle.
Real estate is normal.
For real estate is normal, but not for this. Simple thing, it will be current or non-current to decide. Acha. Now, as I told you that regarding, now suppose some time left, let's discuss certain income tax. Acha. You know component depreciation, all of you I suppose. Yes or no?
Yes.
Huh?
Yes.
Now when I first came across this component depreciation, I didn't understand. What is component depreciation?
Component like depreciation.
Component of the whole thing.
Then I recollected, I went through some American books. Simple thing, depreciation under pro rata basis. So if I have an aircraft, different lives, all these things. Okay? Now today we will discuss about what is the deferred tax effect on component depreciation. Okay? Please write down. Say you buy one asset for 120 rupees. You buy asset for 120 rupees. Life is 6 years. Life is 6 years. After 3 years, there will be very major overhauling.
After how many years?
3 years. There will be major overhauling for what? To maintain the operating capability of the asset for the remaining 3 years and to get the expected scrap value. Okay. Though we don't consider scrap value here, but okay. Income tax depreciation is 25%. That means how much? 30 rupees. Okay? Do you need any more information to calculate at the end of the first year what is the deferred tax asset or deferred tax liability? If you need some more information, I'll give you.
Cost of the major overhauling.
Cost of the major overhauling, I do not know. What will be after 3 years? I do not know. Can I guess what after 3 years? So I can't guess. Anything you want?
Life of asset.
6 years.
Tax rate.
I told you 25% income tax benefit, that means 30 rupees. Tell me what is the deferred tax of liability.
Tax rate into 10 rupees.
4 rupees.
Tax rate into 10 rupees.
Yes?
40%.
Tax rate, say 40%. Okay?
4 rupees.
40% tax rate.
4 rupees.
First thing you remember, calculating component depreciation is very, very simple. I have one building, roof, life 5 years, I know the cost, divided by 5. The rest of the building, life 30 years, divided by 30. So I can work out. Thing is, one major overall is also component depreciation. After 3 years, how much I need to pay, I don't know today. But if I don't spend that amount, try to understand, I do not know what I will be able to make you understand. After 3 years, if I don't do this, I will not be able to maintain the operating capability of the asset. Also, I am not likely to receive the expected scrap value. So what is the present cost of overhauling today? If I do it today, I see it is 30 rupees. Please write down. I see it is rupees 30. So what is my first year's depreciation? 30 divided by 3 and 120 minus 30 divided by 6, that comes to 30 divided by 3, that is 10, and 120 minus 30 divided by 6. So 15. Total depreciation 10 plus 15, 25. Income tax allows me how much? 30. So 5 rupees is my what? Taxable or deductible? Taxable temporary deferred into income tax rate, so it is
That is
2 rupees.
Tax rate.
Is this clear? So remember, component depreciation can also be invisible.
Why I am deducting 30 rupees from 120?
Because 90 is my the other thing. 30 rupees I am paying for this for 3 years, 10, 10, 10. After 3 years, what I will spend, that will be divided 3, 3, 3. Remaining amount is 90, that I spread over in 6 years.
That means that 120 includes this 30 rupees of overall cost.
No, no, no. I bought it for 120. If I this today, I need to spend 30 rupees. So 90 is my cost. If I cannot maintain this, suppose. Think a while. Yes.
120 is the cost at which
120 is the cost.
So that
I need to spend after 3 years substantial overhauling so that the operating capability will be maintained. Okay? And I will be getting the expected scrap value, what we ignore here for the time being. So what is the, at current prices, what is the value? It is 30 rupees. I see if I word this. So 30 rupees first you deduct. 90 rupees is by the value of the asset. After 3 years, I am to again spend say 45 rupees I might to pay again for 3 years. This is a very special paragraph in this.
why is PPI deducting twice 30?
No, not once only. I have to spend 45 after 3 years, suppose.
Did not understand.
Think a while. Time lag. One more.
my original cost is 120.
Original cost 120.
That I have to depreciate for 6 years.
Ah,
So my yearly depreciation is 20 rupees first.
but 120 I cannot distribute 6 years only. Things will change.
Yes, so at the end of 3 years I have to
Ah, yes. 30 is the, what is the expected cost at current value? How much? That to deduct. That is for 3 years. 120 rupees if you charge. 120 rupees if you charge, yearly coming how much? 20. But you have to spend much more than that. Yes.
So I'll take another 20 divided by 3.
Huh?
So another 10 rupees.
No. What is the present value of that today? That you have to take into consideration.
Okay, 30 rupees you are saying.
Think a while.
On that also I have to charge depreciation.
It's a very, very complicated paragraph in
On
this.
that I have to charge depreciation for 6 years.
3 years.
3 years.
First 3 years my depreciation will be 25, 25, 25.
But
30, 10, 10, 10 and 120.